There's volatility in the market. There's sound and there's fury. There's skepticism. There was skepticism about electricity. There's skepticism about automobiles, about airplanes. Every technology's got skepticism. People weren't even sure they liked nuclear power for the past 50 years, right? We stopped nuclear energy from 73 to 2023, and then all of a sudden they decided that infinite clean energy was probably not a bad idea again. So there's always going to be skepticism of the new, but I wouldn't get caught up. I wouldn't be afraid or I wouldn't be cowed by the volatility. The volatility means this is the most powerful, vibrant, useful thing in the entire capital market. That's why it's volatile. And there's energy there. You can harness the energy if you're not afraid of it. Don't run away from the fire, run toward the fire.
The crypto market has spent the last few months in a strange kind of emotional limbo, a powerful recovery from the lows, yet a frustrating consolidation that has tested even the strongest believers. After the excitement of Bitcoin's climb back toward its highs, many investors expected an immediate explosion into new territory. Instead, the market paused. Volatility spiked, price ranges tightened, and across social media and trading desks, you can almost feel the exhaustion creeping in. People are asking, why isn't Bitcoin moving faster? Why does the bull market feel muted? These are natural questions, but they also miss the most important part of the story. Because volatility isn't a sign that something is failing, it's a sign that something important is happening. When an asset attracts trillions in capital, millions of new participants, and becomes the center of political, economic, and technological transformation, the surface will shake. The market will roar. That noise, the fear, the doubt, the sudden pullbacks, isn't weakness. It's pressure building before a breakout. It's energy searching for direction. And in moments like this, you don't retreat. You don't shrink. You remember why you were here in the first place. That's why Michael Saylor's message at Binance Blockchain, Week 2025, lands like a lightning bolt. While others look at the volatility with fear, Saylor sees it as the purest evidence of Bitcoin's power, a network absorbing capital, computing energy, and political relevance at a scale no innovation in modern history has ever matched. He argues that this turbulence is exactly what you would expect when a new form of economic gravity asserts itself on the world. And he reminds every investor struggling with doubt that Bitcoin has always rewarded those who run toward the fire, not away from it. Today, we're going to break down Saylor's latest presentation, from the global political shift toward Bitcoin to the unprecedented embrace by banks and financial regulators, to strategy's blueprint for becoming the world's most powerful digital treasury. And at the end, we'll unpack his final message, the one idea he believes every investor must understand if they want to survive and thrive in this new digital era. But before we dive into the clips, make sure you hit that like button, subscribe if you're new, and stay with me all the way through. Thanks for the support, and enjoy the video.
Let's start with an observation. There's a revolution in the capital markets going on. And that revolution is impacting the capital markets for currency globally. It's impacting the capital markets for equity. It's impacting the capital markets for credit. It's impacting the derivatives capital markets. And the basis of a lot of this starts with Bitcoin. And it starts with the embrace of Bitcoin by the global financial community. So Bitcoin is emerging as digital capital. And why is it digital capital? Because the President of the United States, Donald Trump, has styled himself the Bitcoin president. He's declared he wants to make the United States the crypto capital of the world. He's decided he wants to lead in digital innovation, whether it's digital assets, digital capital, digital finance, or digital intelligence. And you can see that it's not just rhetoric, because he's appointed a cabinet, and that cabinet consists of an incredible array of digital advocates. The Vice President of the United States is an advocate. The Secretary of the Treasury, Scott Bessent, is an advocate. The head of the SEC, Paul Atkins, is an advocate. And not just the financial regulators, you also have non-financial regulators like Tulsi Gabbard, Kelly Loeffler, Robert F. Kennedy. even the head of the FBI or the head of commerce. You've got an unprecedented support for this asset class across those people running the entire government of the United States. And this is a big deal. We've come a long way in 12 months. The second thing that's happening is that for Bitcoin to emerge as digital capital, you need the banking industry of the world and the banking establishment to embrace it. And they were fairly hostile to the entire crypto industry until about a year ago. And even a year ago, with the change in administration, there was uncertainty as to whether or not the banking regulators would actually make good on the campaign promises of the Trump campaign. And what we've seen is they have. There's been a series of announcements by Treasury, by the OCC, by the FDIC, by the Federal Reserve, and even joint bulletins from all those financial regulators. The sum total of them to say crypto is good, Bitcoin is good, it's okay to bank it, it's okay to lend against it, it's okay to custody it. We know that the previous administration punished banks that engaged in crypto activities. We're not like them. There's a 180-degree sea change. So banks are the most bureaucratic, risk-averse institutions in the world for good reason. You would think that from the point that the tone at the top changed 180 degrees, it might take a bit of time. I mean, for all the banks in the world to embrace crypto, to embrace Bitcoin, in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months, right? We have announcements. Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be, I couldn't get a loan against Bitcoin from any major bank, and now if I counted the top 10 banks in the United States, 8 of them are actually engaged in crypto lending, and they've all flipped their stance in the last 6 months. So this is a major change. Wall Street's embraced Bitcoin as collateral, as capital. We were the first company that was publicly traded with a substantial holding of any crypto asset, and the first company with Bitcoin on the balance sheet. Then there were a dozen, and then there were 2 dozen, and then there were 60, and now there's a lot more than that. When we started doing it, there were no ETFs. And you can see that the first ETF was approved January of 2024. There's 85 worldwide. And of course, the most successful ETF in the history of the world is BlackRock's IBIT ETF. So you can see that Bitcoin has exploded through all of the fund business. It has exploded and been embraced through hundreds of publicly traded companies. I mean, to think we've gone from just a handful to more than 200 in 12 months is just an extraordinary move. Bitcoin is the economic foundation, the ethical foundation, and the technical foundation of this entire market. If you consider why, it's because it has the most power. It has the most electrical power, 24 gigawatts. That's 24 full-on nuclear reactors. That's more energy than drives the US Navy. It has more computer power, more than 1,000 exahash. That's more power than all the data centers that Microsoft and Google could muster together. It's got more trading power. There are 1,000 exchanges. Anybody can trade this anywhere in the world. Anybody can custody this anywhere in the world. Anybody can transfer this asset anywhere in the world. It's got more political power. We've got hundreds of millions of crypto enthusiasts. We've got hundreds of millions of Bitcoin holders. 30% of the registered voters in the United States are pro-crypto. It's got more economic power. More than $1 trillion has been invested in this network. $1 trillion of real capital. My company has spent something like $48 billion to acquire 3.1%. And so if you basically take 3.1% to a 48 billion and you scale that out, you see how much real money is flowing into this network.
Saylor's first major point is that the world's capital markets are experiencing a structural realignment, something deeper than a bull cycle or a trend. He argues that Bitcoin's emergence as digital capital is accelerating because the highest levels of global finance and government are no longer resisting it. Instead, they're adopting it. Regulatory hostility has reversed. Major banks, once the final stronghold of skepticism, are flipping their stance in months, not years. And for Saylor, this isn't political commentary, it's economic reality. Capital always flows to the place where it is treated best, and right now, Bitcoin is being welcomed by institutions with trillions under management. But Saylor pushes even further. He's not just talking about political support or bank adoption. He's talking about the birth of an entirely new financial layer built directly on Bitcoin. In his view, digital capital isn't the end point. It's the fuel for a new age of digital credit, digital treasuries, and companies that outperform their competitors simply because they optimize for an appreciating asset rather than a depreciating one. This is where strategy comes in. Saylor explains why accumulating hundreds of thousands of Bitcoin isn't a trophy. It's the foundation for rewriting the rules of corporate finance. And that leads us directly into the second major section of his presentation, where Saylor explains the mechanics behind Strategy's Bitcoin-powered credit model and why he believes it represents the next great transformation in digital finance.
So, the first big idea is you now have digital capital, a store of value. But that's just the beginning. That is the basis of an entire digital finance and digital credit industry. And all of these companies capitalizing on this can do lots of different things. You can rethink insurance, you can rethink banking, you can rethink trading, you can rethink all sorts of finance. We have focused upon rethinking credit. And so we are the first digital treasury company. What do? We created a capital balance, about 650,000 Bitcoin as of now, and we've acquired that consistently over the past 5 years. We're acquiring a huge amount of capital because we want to use it to create an extraordinary new kind of credit. Right now, we're the fifth largest treasury in the S&P 500. We're climbing our way. I think we'll be number 2 in the next couple of years. And in 4 to 8 years, we expect to be number 1. And we're doing that because we are positively polarized to capital. If you look at this chart tells a story, which is every company on Earth, if it's conventional, is capitalized on money markets. The money markets return about 3% a year. That's the conventional finance strategy. But if you were to capitalize on Bitcoin, you'd be returning 47% a year. It doesn't take a rocket scientist to see that if the cost of capital or the hurdle rate is 14%, that's the S&P index, then any company capitalized on money markets is destroying shareholder value as they accumulate capital. But any company capitalized on Bitcoin is increasing or creating shareholder value. So when I say we're positively polarized, what I mean is every company that capitalizes on digital capital can raise more money and get more powerful forever. And they're competing against companies that are capitalized on fiat currency or conventional money markets that are getting weaker the more capital they carry on their balance sheet. So conventional wisdom is decapitalizing companies. Digital wisdom is recapitalizing companies. The secret to our success is we simply raise capital at the cost of credit, 6 to 12%, or the cost of equity, 14%. And then we buy something appreciating 47%, and that's how you get to a 65% return. We raised $22 billion of capital last year. We've raised $22 billion of capital this year. And so all of that money is flowing into the crypto economy. Yeah, my message is digital is changing the world. It's very obvious. Digital intelligence is going to go into your car, into your robots, into your phones. We're going to have 1 billion AIs. The cars will drive themselves. Robots going to make stuff. If you want to make stuff, do things, think about things, you got to think digitally. Digital assets are going to change the world. Digital currency, digital equity, digital credit, digital finance, digital securities. It's all digitally transforming. A very simple lesson of digital is there's nothing you can't do better digitally. If you think about the advances in digital photos and digital video and digital education and digital entertainment, the digital transformation is upon us. Right now, we're transforming capital markets, transforming banking. My message to everybody is figure out how to harness the power of digital technology to provide your good, your service, your product, your investors something better. Serve the citizens, serve your customers, serve your family, right? There's volatility in the market. There's sound and there's fury. There's skepticism. You know, there was skepticism about electricity. There's skepticism about automobiles, about airplanes. Every technology's got skepticism. People weren't even sure they liked nuclear power for the past 50 years, right? We stopped nuclear energy from 73 to 2023, and then all of a sudden they decided that infinite clean energy was probably not a bad idea again. So there's always going to be skepticism of the new, but I wouldn't get caught up. I wouldn't be afraid or I wouldn't be cowed by the volatility. The volatility means this is the most powerful, vibrant, useful thing in the entire capital market. That's why it's volatile. And there's energy there. You can harness the energy if you're not afraid of it. Don't run away from the fire, run toward the fire. That's what I would say to everybody. If you can't handle if you can't stomach 50 vol or the volatility of the capital, then there's a simple answer, the credit. Either create the credit if you're a builder, or buy the credit if you're an investor. You can have the benefits of the crypto economy without the volatility if you buy digital credit. And if you don't want that, then you can create the credit. And if you want raw power, plug digital capital into your country, your company, your family, your product. I think it's the most extraordinary thing of our lifetime.
When you zoom out from the details of Strategy's operations and look at the broader picture Saylor paints, a clear theme emerges. Bitcoin is not just an asset. It is a new economic operating system. His argument is that the companies, nations, and individuals who position themselves closest to this system aren't simply making a smart investment. They're aligning with the winning side of technological history. Digital capital compounds, fiat capital decays, and in Saylor's view, the gap between those two realities will only grow wider as adoption accelerates. Strategy's model illustrates this perfectly. They raise capital at traditional costs, 6%, 10%, 14%, and deploy it into an asset that appreciates at multiples of that rate. This is not gambling. It is not speculation. It is exploiting a structural asymmetry in the global financial system. And as more companies begin to understand this, Saylor believes we'll see a wave of corporate recapitalization unlike anything the market has ever witnessed. Firms capitalized on fiat will slowly suffocate under rising costs. Firms capitalized on Bitcoin will expand, attract, and dominate. In other words, a global reshuffling of winners and losers is already underway. But Saylor's final and most important message goes beyond corporate strategy. He reminds individual investors that volatility is not the enemy. Volatility is the signal. It is the price of admission for the greatest asymmetric opportunity of our lifetime. When an asset becomes the bedrock of digital finance, the political favorite of the world's largest economy, the collateral for banks, the foundation of ETFs, and the treasury standard for corporations, that asset will move violently. That volatility is a feature of its strength, not a flaw in its design. And here's the part that's most bullish for the crypto market. Every layer of this ecosystem, from digital capital to digital credit to digital intelligence, reinforces the others. AI needs hard money. Corporations need appreciating collateral. Governments need technological leadership. And investors, ultimately, need an asset that protects them from monetary decay. Bitcoin sits at the center of all of it. That is why Saylor says, don't run from the fire. Run toward it. If you took value from this breakdown, make sure you hit the like button, subscribe to the channel, and drop a comment below, letting me know your biggest takeaway from Saylor's vision. Thank you for watching. And stay tuned because the digital era is just getting started.